The last couple of years have created almost a herd mentality using social media like Reddit, through the Wall Street bets, for example, where they've created fantastic wealth for individuals watching a share price get squeezed. I find it a little bit ironic when one talks about Bed Bath and Beyond and how a young gentleman borrowed $25 million and made $110 million. The last month, Bed Bath and Beyond has gone up like 430% or something ridiculous, over 100% in the last 2 days of trading. Cassava Sciences has got it's not a meme stock, but it's definitely had a lot of people with short positions because of malfeasance, and they're basically lying about their research to get grants, has gone up about 60%. And so there's a lot of short squeezes that happen. But the irony is, most of the apes, the guys that are backing Gamestop and AMC Entertainment, they hate the corporate financial world, the institutional world. They hate short sellers. The likes of Citadel gets a very bad rep, but Citadel is involved in derivative trading. They involved in backing the likes of Robinhood, which is a platform that the short sellers and the apes don't like. But you need to keep in mind that when there is a really big short interest in a stock, and some of that short interest is derivative interest, don't forget that these institutions, if they've got people that have got put options and derivatives where they've short sold, whether it be a contract for difference or whatever the form is, they need to make sure that they can see right in the price differential. And so it's in their interest, if they've got so many people putting down money on shorts, that they lose that money before they have to go to market and cover. So all these apes are talking about getting Ken Griffith and Citadel and getting all the short sellers and Melville Capital and all of that. But Ken Griffith, Citadel, Robinhood, all these guys actually benefit if they're carrying a book with the short positions where real money has been put in, and those put options, derivatives, contracts for difference, whatever it is that is being dealt with, actually go against them. Then obviously they don't have to honor those trades. They're benefiting just as much as those apes that are involved in these stocks. Something to keep in mind. I mean, many of these apes do understand how settlement has to take place, and they talk about there being more shares around than are actually an issue. So basically that's a counterparty risk. So whoever's writing the option or the derivative, if the share does actually go short, they need to pay that difference, or when it hits the strike price. So by making it go against them, if they're carrying a heavy burden of short positions and you can ramp that stock up, it actually benefits these institutions. It might benefit many retail investors, make some of them multi-millionaires or millionaires overnight, but it also benefits the institutions that are written those short positions, and it may affect the hedge fund managers that have got a short position. But the reality is that it's all artificial, and when you're driving a market artificially, it never ends well. It's never good for anyone. So Kevin, the CEO of Gamestop, took a position on Bed Bath and Beyond. I believe he made like 130 million. Some young gentleman walked away with 120 million or 110 million in profit from 25 million which he borrowed from family and friends. And it's quite interesting stories. I mean, Bed Bath & Beyond has gone up 430% in the last month and over 100% in the last 2 days. A lot of it is because of short covering. And we saw Gamestop, AMC Entertainment also going up for similar reasons. So there are a few things to keep in mind. The one is that the hedge funds themselves are going to the counterparty to write the put option, or to take out the contract for difference, or to borrow scrip which they'll need to repay back. The counterparty is making money either way. If they don't have to pay because it doesn't exercise at the strike price, or the poor hedge fund manager has to keep on covering the differential because it's a contract for difference, or however the structure is, the institution benefits as well. So these guys, Ken Griffith and Citadel and Robinhood and all of them that the apes hate so much, are sometimes involved in these transactions. And obviously, if they don't need to see right, there's the reason that there are more shares in issue in the market than it's not because of short sellers, it's because of these so-called artificial shares are often driven by derivative products and the time it takes between trade and settlement, which can sometimes be T+3 in most markets. The other beneficiary other than the retail investor are of course the executives, the CEOs, the selling shareholders. Adam from AMC Entertainment has got a fantastic reputation with all the apes, and one mustn't forget that he's able to pay himself handsome bonuses. He was able to generate cash by selling additional shares to retail investors that were happily buying up AMC Entertainment. And so, think about that for a minute. In addition, he purchased a gold mine. Hopefully, other companies that were in danger of going business can do similar things, but not for selfish interests. And I'm certainly not implying that Adam did anything for selfish interest. But if you think about it, the entertainment industry, going to cinemas with streaming and all of that, is dying. It's a dying industry. And so granted, it's great going, take your girlfriend to a movie, have some popcorn, enjoy the experience. In fact, that's how movies make their money, from a wonderful Marvel movie. A good 3D experience is fantastic to enjoy on a big screen, IMAX, all of these things. Movies have tried to reinvent themselves. You can go to a VIP cinema with plush leather seats. You get the 4D experience now where the seats vibrate. So they've really tried. The intention, though, I'm sure, wasn't for money to be used to go and buy a gold exploration company. So it's just a thought in terms of the unintended consequences of retail investors ramping up a share, which is basically a company and which has real shareholders other than the retail investors, real selling shareholders that get paid real salaries and real bonuses and real cash, but they've been in a struggling business. Now, GameStop is obviously a great retail investor. Gamers love it. They were able to purchase their games, and maybe GameStop can do something that will get them to be in like an online gaming streamer, or in the next Tencent, or who knows what they could do if they raise sufficient capital. But it might be unlikely. Bed Bath & Beyond, I don't know. They suffered from COVID. They've got a very limited line. Maybe they can change their retail expansion, offer additional things if they're able to sell shares. But generally, what will happen is debt will be paid off, and the founding shareholders will benefit in the long run. So don't be a lemming and follow everybody, because you may well find yourself falling off a precipice pretty soon. My feeling is that you don't want to be the last one standing when the music stops and you don't find a chair. So I love the fact that apes are getting wealthy in the process and so on, and I don't like the fact that poor short sellers that are really trying to discover value and bring a share price back to its actual fundamentals are being wiped out. And I don't like the fact that other institutional parts of the financial service industry are making a lot of money. They're happy to sell these short positions, and somehow they're benefiting as well. Now, I don't want to go into the technical details of it, but as a counterparty, these institutions that are writing the options, the put options particularly, or controlling the derivatives, they're benefiting. They're very happy to see the short sellers squeezed out, so they don't have to see right on their contracts as a counterparty. So just keep that in mind, that while you may vindicate short sellers having been squeezed out of a position, the reality is that there are a lot of unintended beneficiaries other than the retail investor. Thanks for watching. I hope you'll subscribe and watch one of my other videos.